Hello friends, welcome to the 17th July 2026 edition of Know Your Markets. Coming to the US markets, we had a correction in Nasdaq. The technology stocks had a fall of around 2.5%. That was because of the profit booking and in the AI sectors, and leaded by the Korean stock exchange, that is the Kospi index, which also fell heavily last week. So the Nasdaq fall by 2.5%, more than 2.5%, while the S&P 500 fall by 1.5%. The Dow fall by hardly a 1%. That was because of, as we speak here in the last Know Your Market webinar, the Dow fall around 1%, more less than 1% last week. That was because of the results of the banking sector, which came very good. Most of the banks, the major banks, reported excellent numbers, and because of that, the Dow was able to hold its levels at current levels. We expect the momentum in Dow Jones to be carrying on for another week or two, but Nasdaq still some pressure seems to be pending, and for that reason, we expect that in the next week also we would see some fall in the technology stocks. Coming to the international markets, the major highlight of this year was the Kospi index, the Korean stock exchange, led by two heavyweight stocks, Samsung and SK Hynix. The index actually is now under a big selling pressure, and if we see the year-to-date gains in Kospi, the high levels were around 110%, and currently the year till date gains are around 54%. That indicates that around 50 to 55% erosion in the Kospi index from the higher levels for the current year on. So basically, the selling pressure is definitely in the AI related stocks, and because of that selling pressure, we are seeing the selling pressure in Nasdaq also. And once again, the question arises everywhere whether the technology companies that are spending so much amount on the AI infrastructure, will it be a fruitful investment or not? As regards to the other indices, Nikkei also is in a correction mode. The higher levels for Nikkei were around 40% year till date, which has slided down to 28% year till date gains. So we are seeing some corrections in most of the indices, which has gained in this year on the higher sides. Last week, we have a very good result season, and the results reported by the banking sector were very good. Thus, the Dow was able to maintain its level with hardly a lesser than 1% loss compared to other indices. But the geopolitical tensions in the last week has risen again. The U.S. Iran conflict has once again started with a higher attacks on each other. This is a very crucial point, because if we see the last week gain of crude because of the geopolitical tensions were around 14%, and if we add on the last 2 weeks gain by the crude, which is now at around 20% compared to from the lowest point created when there was no conflict between the between US and Iran forces. Now, with rising in crude, the crude has achieved a level of around $88 per barrel. We expect that anything above 90 to 92 level in crude will once again bring fear in the market, and because of that, we can see the indices also coming down, and there would be good profit booking in the markets. A level of 92 brings fear because that will bring inflation once again in limelight, and this month the CPI number, which definitely came down as we told earlier also, will once again be in a question that it will again rise above 4 levels, 4 percentage basis. So the thing is, basically the rising in crude is once again bringing more tensions in the traders, and we can expect that if the crude rises above 92, things will go a little bit more on the downside. Hence, we recommend have a close look on the prices of crude this week also, because as and when the conflicts increases between US and Iran, we may see the prices of around 95 also in future days. This was all regarding the US markets. Now we come back to Indian markets. The Nifty gained a little bit higher this week with uh, half a percent gain in the Nifty index with closing around 24,384. The market did regain some levels from the lower lows created during last month, but we expect that with the results coming out of Reliance Industries on the Friday after market hours, and the major four banks results that came in Saturday, that is the HDFC Bank, ICICI Bank, Axis Bank, and Kotak Bank. The results are mixed and stable, but the rising of the crude prices and the increase in the geopolitical tension, we may see the Nifty very difficult to regain its ground above the high created 3 weeks before. Importantly, that level is once again the 200 EMA for Nifty, and hence that will be a very strong resistance. As regard to Nifty, we expect Bank Nifty to perform far better. The closing, given the closing price of Bank Nifty on Friday was very good. Technically, it's poised to move up very fast, but with geopolitical tensions, maybe we can expect the momentum on the upside a little slower. But compared to Nifty, Bank Nifty is far more placed better technically for an up move. Also, the other sectors, if we speak, it is the auto sector also is trying to gain on momentum, and especially for the finance sector is also gaining momentum. The finance NBFC finance stocks, which are once again in limelight, and if Bank Nifty is moving up, we expect these stocks to outperform and create more alpha compared to the other indexes and stocks. So with this, we come to the end of the Know Your Market this week session. Happy investing and try to create more alpha. If you have any query, you can write us on alpha advantage advisory at the rate gmail.com. The email address is written in the description box. You can write it. We will definitely reply and help you out regarding your queries. Thanks.